Welcome to another day in the Matrix. This is Red Pill Podcast number 113, and today's podcast is going to be dedicated to the U.S. debt ceiling, and we're going to be doing a full decode regarding this. It has become the talk of the town regarding global finances. Whatever happens in the United States with the world reserve currency has a rippling effect out to all corners of our realm, and jokes aside, but very seriously, a lot of people have been reaching out to me about this, so I decided to start looking a little bit more into this date of June 5th, and I uncovered lots of juicy gems to share with you all, so I'm really excited to get into this. Again, welcome to Red Pill Podcast number 113, and if you're new here to the Wolfpack, welcome to the community. It's so great to have you with us. If you've yet to get access to our Discord server, just go ahead and send me a direct message on Patreon with your Discord username and the last four numbers after your username, and I will reply back to you on a Patreon message with that Discord invite. And doing amazing with the coin voting system here on the altcoins. We're going to be going over a couple of them today. Maybe we're going to try to hit 5 different coins. We got Litecoin, Songbird, Alchemy Pay, Dogecoin, and Stronghold. So we're going to see how that all goes. I would like to say as much as possible about them. Try to keep this a little bit closer to the hour mark this time around. I want to start, getting as much as I can out in these podcasts without going too over in time. I know time is precious. My time is very precious, and I want to make sure that you guys get the best value for supporting my art. It really means the world to me to have you here. And we're just going to jump straight into it today regarding the analysis on the Dow Jones and the NASDAQ. And then I'll be getting into the decode with the US debt ceiling. But just to kick things off, if you guys remember on Red Pill Podcast number 111, we talked about the two charts of the Dow Jones and the NASDAQ, and I was telling you guys how the Dow, which we're looking at right now, already topped out in its automatic rally highs technically, and that had everything to do with this move over here back in December near the end of the year. And we started planting these lower highs, followed by this larger correction into mid-March, which was around that time frame of Silicon Valley Bank failing and Bitcoin dipping slightly below 20K. And then we had another rally with another lower high into the end of April. Correction now, and this whole move is what's happened around the time frame of that podcast number 111, and you can see how I was telling everyone to anticipate that because of the finality of the Dow Jones's automatic rally cycle, that I am no longer looking for much more upside to go. But the NASDAQ, on the other hand, I told everyone that I anticipated it to be bullish. So the NASDAQ was printing bullish macro candle closes, and I expected it to continue up into the finality of its automatic rally. And that is exactly what we did. Massive 360 point close leading into this prior weekly. I assume, again, probably very news driven, a lot of things going on with Congress, U.S. Treasury Secretary Janet Yellen, and like I said, we'll be getting into that in a moment, but this is exactly how it played out. I told everyone that the Dow, I wasn't anticipating any more upside. It's pretty much topped out. It's going to be jagged and chop as much as possible from here on out. And on the other hand, the NASDAQ was looking extremely bullish and to anticipate it moving into the golden pocket. And here we are. So this is great to watch this analysis come to fruition. As I brought up in that last podcast, how obviously NASDAQ is more tech sector, more, things like Tesla are really driving it. And it's just kind of one of those things now that we're seeing things catch up. So I don't want to get too deep into the exoteric stuff. Of course, you all come here for the esoteric. You come here for the esoteric, wisdom regarding markets, mindset, and decoding. And that's what I want to stick to. But, it shows you how everything's just playing catch up right now. And with this latest move on the NASDAQ and what we're going to jump into regarding this upcoming decode, I'm going to start to discuss, and everything going on with the US government and finances as a whole, I feel like crypto is really on its final moments of it playing catch up. So that's very positive, and I believe today's podcast will be a very positive outlook regarding everything. And this move on the NASDAQ definitely is now supporting this concept. So I hope you guys can maybe take a moment and go rewatch Red Pill Podcast number 111 if you haven't. And if you're somebody who wants to learn TA and kind of make more sense of how this is all operating. And once you're in a trend is your friend. You've heard that many times. And even though the Dow was looking the way it was looking, I still felt that the NASDAQ was going to go up and the Dow was pretty much going to stay where it was at, chopping in a horizontal range. Now, getting specifically to the analysis, I really like how we tapped down on the 0.5 fib. That's great. Again, lower highs though. And now this could actually turn into an inverse head and shoulders where you have your left shoulder head and right shoulder forming. And this would be your resistance line to break. So it could be something like this, getting back above, maybe into the 702, come back down to test. And then you could have some sort of move to the upside. Now, I don't believe that's going to happen. I don't believe it's going to happen. I think this is going to be a fake out move. So the NASDAQ, on the other hand, looking pretty good. Let's take this step by step. The S&P even closing on a weekly high over the past 270 days and now headed towards the 618, which is the bottom of the golden pocket. These are automatic rally vibes. So it's just taking its time because of the maturity of the chart that we're analyzing. Same situation seems to be the case for Bitcoin, now completing multiple cycles over a decade time span. But we're seeing that S&P is playing catch up now, heading into this golden pocket. That's automatic rally energy. And with that being said, I do feel like we can get a false move on the Dow because we already had that false move come in way earlier into the end of last year. And what I mean by this is we could have something bullish, what looks like a high, and get up to this like 702 territory, and then boom, just end it and go into this bigger, deeper correction that we're anticipating into the fall time. So all in all, the highs that we're seeing right here on December-ish of November, December of 2022. I think that's it. I do not see us getting higher than this wick right here. Pretty damn close to 35,000 points. We're talking about the Dow, by the way. Now, the S&P definitely has room. The S&P, I think, regarding this next move up, could be playing catch up into about right here on 4,300 points into this peak. And really what you see with automatic rallies is a lower high that's higher than your prior structure, and this right there leading to the selling climax. And right there, that would be the move somewhere into that 702. That would be really dramatic, by the way, for the S&P. But that's kind of the market that we're in right now. We're in la la land. And I'm sure you all agree. The amount of debt that is revolving around this market is unprecedented. It's silly. And as for the NASDAQ, we're pretty damn close. I mean, we're right there. And with how bullish tech can get at the speed that it could get bullish, I wouldn't even be surprised if this did make a move up to the 786. And this kind of being your levels to consider, as I do not think we'll go higher than that. It would be very weird for us to break higher than that 15,200 level. But to come into the golden pocket, have a little bit of trouble there, chop around, and then following up with one last leg up for Bitcoin, Ethereum, and the rest of the altcoin market. So I hope that helps. This was really just for a quick recap of what we talked about in Red Pill Podcast 111. I wanted to follow up on it. I wanted to let you guys know what I was seeing and just to show you how this all turned out regarding the NASDAQ going up based on the analysis and the Dow holding into its horizontal range, not making new highs in the structure, whilst we saw the NASDAQ and the S&P continue another leg higher on their prior weekly closes. Now we're moving into a new week. And this week that we're moving into will be pivoting through the monthly close. So we'll try to talk about that a little bit today. I'll actually take a note of that on the Bitcoin analysis just one moment. I would love to talk about the monthly close because that will happen in between now and the next red pill. So let me just take a note of that. All right. So now I am hearing so many theories about the Federal Reserve in the month of June and how Congress will respond next regarding the debt ceiling on June 5th. And many analysts believe that this will be the catalyst for the next leg up in the markets. So a lot of analysts across the board are feeling that this could be what it takes for just one last bullish swipe to the upside, and then we'll see what happens next. I'm not alone in that theory. I've shared that basically going back to a decode that I made called World Reserve Decoded, where I became very open-minded to the month of June, considering the last two Bitcoin cycles. And we've talked about this so many times, so we don't have to go there right now. But where we're heading to is this idea behind June 5th. And that's what we're going to stick to right now for the remainder of this decode. And I was sent an article earlier, and I'm quoting this right now. So, quote, U.S. Treasury Secretary Janet Yellen on Friday set a deadline for raising the federal debt limit, saying the government would default if Congress does not increase the $31.4 trillion debt ceiling by June 5th. So I think it's really funny that it's 31.4 because 314 is pi, 3.14. So they love this number. Remember how the Bitcoin all-time high that happened on the 10th of November back in 2021 was on the 314th day of the year, the 314, and it hit $69,000. 69 is the yin yang. It's the Cancer symbol. It's the number symbolizing the balance of opposing forces when they unite. The black and the white, but not only, it is the white within the black and the black within the white. It's the subconscious and the conscious mind. It is the leading point into your trinity. And I don't want to go further than that, but it just shows you the significance of Bitcoin hitting 69,000 on the 314th day of the year, the day that is kind of an esoteric pi day. So I just find it really funny how this debt ceiling is $31.4 trillion, the 314 pi. So June 5th connects to the first day of Rosh Hashanah, which I had up here before, 9/15/2023, by 102 days. You probably know about this number. It's the mirror of the 201, like Event 201, which had everything to do with the precursor to what was C19, and that was a tabletop exercise that they showed us exoterically as predictive programming to what literally happened on the world stage and lasted for 2 years and 2 months. Beautiful. You gotta love the psyops. You gotta love how they show you the trick before they perform it on you. That's what a real magician does. They don't hide anything. They're not pulling the woolly over your eyes. I've spoken about this so many times. They just show you exactly what they're gonna do, how they're gonna do it, and it's up to you to realize that. And you can't say or blame, the enemy when the enemy is literally telling you what they're about to do to you. So getting back to this 102.201 thing, it's a very important number. You are probably well aware of Agenda 21. You remove the 0 in the rules of numerology, you get back to that 21 from the number 201. And this lands on a Monday. Now, Monday being the day of the moon, speaking of 21, we have moon giving you 21 in full reduction. Moon dealing with finances for sure. And the standard date numerology on this date is an 18. And number 18 is arguably the most important number in Judaism, symbolizing life or living, the term living. And, I've been thinking about this a lot lately. I'm going to go ahead and assume that this is their way of saying what I have been calling prana. It's just life force, and they've numerologically, tied it to this number 18. So it's really fascinating how this number keeps showing up quite a bit, and it doesn't surprise me that this is the day. that we're getting this debt ceiling, conversation on that 18 standard date numerology. So definitely consider that. And it's also amazing how this word in English, the way that it's spelled in English, and you type it into our gematria calculator. Remember we were talking about 21? Well, this is 21. And this, again, doesn't surprise me, and it should not surprise any of you, because this ties back to Saturn, who is their mythological lord, or El, or Baal. And that 21 is always coded into anything that has to deal with finances, Judaism, time, timing, calendrical systems, you name it, because Saturn is Father Time. It's who spins the zodiac wheel. And that is why it is worshipped. It is worshipped as the timekeeper and your mortality here in this physical realm. So, not to get super esoteric here, but we've talked a lot about Saturn and its ties to Judaism. You have the Sabbath day, the Saturn's day. You have the Sabbath year, the Shemitah year. You have 7 cycles of 7 years. That's leading into Jubilee. So, speaking of Saturn, this year, Rosh Hashanah officially lands on a Saturn day. And you can see that right here, September 16th, Saturn's day. And these two dates connect by 103 days. And this 103 ties us back to Mercury, another very important player regarding finances. So this is the god of fiat money, not wealth. That is not the truth. Whenever you hear about Mercury or Hermes being the god of wealth, that is a lie. This is the god of artificial wealth, money created out of thin air, which is fiat and also crypto, blockchain. This is money created out of thin air. Mercury is the prince of the power of the air symbolism. And we're moving into Aquarius, you guys know of this. So this is why we're moving into this transhumanist world order where we will have blockchain as our main system of commerce, finances, etc. We are going cashless. That is so mercurial. I can't even begin to break it down. But this is amazing because of this tie of the 103 days between Rosh Hashanah, the official Rosh Hashanah date, and Monday, June 5th, 2023, where we're talking about the debt ceiling and this arbitrary $31.4 trillion, which is just fairy dust with belief. So Mercury vibes. Now, Mercury, again, giving you that 23, and June 5th, the date that we're talking about, is starting the 23rd week of the year in the Gregorian system. So you have right there week 23 starting on June 5th. Think about this, guys. All right. Mercury giving you that 23 tied perfectly 103 days away from Rosh Hashanah. Now, this 23 is going to show up so many times by the code. We're having this event on the 23rd week of the year. Mercury giving you 23. I mean, you guys have seen me do this many times, but Bitcoin equaling 23 in the same cipher. We have the Hebrew year of 5,783, which we're in right now. That adds up to 23. The year I'm calling Jubilee adds up to 23. It's all coded, right? And we were talking about how this event starting on the 23rd week of the year on a Monday, the day of the moon, giving you 23 in the same cipher. It's all coded. So let's go back to last Rosh Hashanah, which is the 26th of the 2022 year. And we're going to go to the last day, which is technically the starting point of Jubilee, right? Now, this is an amazing connection, deep. I'm not entirely sure if I've brought this up before. I might have in prior, pieces of content I've released. But these two dates of the start of Jubilee to this date of June 5th, 2023 is 251 days. And 251 is the 54th prime number. And if you do the date numerology the way I like to do it with double digits, you're going to see that this date adds up to 54. Now, we can start going into some of the gematria here. Like we're talking about the debt ceiling, and that is giving you that 54 in full reduction. And the most important number 54 you're going to get in basic English ordinal gematria is the word sun, 54. Now, That is gold, right? It's where your sacred oil rises like the phoenix from the ashes. Then you are born again, just like the sun rises in the morning. And this is again coded in sunrise. You have that 33 in full reduction. This sacred oil that I'm talking about travels down your 33 vertebrae and back up to your solar plexus. Again, solar, sun, plexus, giving you 45, the mirror of the number 54. And anything dealing with the sun deals with currency, money, finances, and the economy. This is energy that is balanced by the moon, Sol, and Luna. So let's get back on track. Another 54 and 45 connection, and the main theme of today's decode is the US debt ceiling. And you could see US debt ceiling giving you 45. Again, another connection to all of this. And now we're going to go a little bit more esoteric here. And remember what I always talk about, how the months that are numbered in our calendrical system, the Gregorian system, is fraudulent. So June is technically your fourth month in our calendrical system. You have March being the first, April being the second, May being the third, and June being your fourth month. So technically, this date of June 5th should be 4/5. Or you could write it as 5/4 internationally. It's the same number anyways. So we have this technically being the 5/4 or 4/5 date with the 5/4 date numerology in Gregorian system, and we're talking about all these 54 and 45 connections. Just amazing how this US debt ceiling giving you that 45 as well. And all of this is tying together. Earlier, I was showing you how this date of June 5th ties to this upcoming Rosh Hashanah, which is on the 15th of September, 2023, by 102 days. And we were just talking about the number 54 and 45. Well, let's go over to the periodic table, and you're going to see that the 45th element is rhodium, and that has 102 atomic mass. 102 atomic weight, just like we were showing you earlier, how these two dates are connected. The event 201, agenda 21, Saturn equals 21, rhodium equals 102. With this 45 connection, it's wild. And this rose, whenever you talk about the red rose, you're talking about the female anatomy, female reproductive system. This is where all life is delivered from. The rose bud is the budding, and this is the birth, where you are crowned. They call when your head comes out of your mother the crowning. That is where you are crowned. This is all coded into human anatomy. So this is amazing, this connection back to this, because rhodon means rose-colored. Again, rose coming back to the female anatomy. And this also has to do with this time of the year, right? Because this is where we start having the rose bud. This is where we start seeing this flower show up in nature. So there's even that element to it, the natural element. And now moving past this, we were speaking about the number 54, and that's going to bring us to the element xenon. And we're going to go a little deeper now with xenon, because we have this 131 atomic mass. Now, 131 is your 32nd prime number, and I know we were talking about the sun earlier. The sun is Leo. Leo is that 32. I just said that 131 is your 32nd prime number. That's tied back to the sun, Leo, gold, etc. But I really just want to hang out on this 131 being the palindrome of the number 13, forwards and backwards, still 13. And let's show a bunch of 13 connections. So we have debt being that 31. Debt is, of course, the word dead. Don't look at the code right now. Just this is the wordplay here. It is debt. You are not in debt. You are dead. This is very amazing wordplay. So as you become a master of finances, one of the missing links for most people in stepping up the rungs of success with finances is learning how to master debt, actually learning how to leverage on debt, leverage on credit, etc., leverage on their borrowing power. But we just see this word straight up as debt. It means dead. One moment, I'm just going to drink some water. Alrighty. So Now that we have this 31 connection, I want to show you from the gematria going back to the date numerology that this 31 connects to the last lunar eclipse, which was on May 5th, the 5/5 date, by 31 days. So if you're going off of the dates, that last lunar eclipse that we had connected to this Monday, June 5th date, 31 days, all coded in, 31 in debt. This is having to deal with Congress, is 31 in Chaldean. This is all about cash equals 31, and the same cipher as debt equals 31. This is all leading us towards CBDCs, which equals 31 in the same cipher. This is talking about the government defaulting. The word default even equals 31 in Chaldean. And that's what this is all about. Allegedly, if Congress does not raise the debt ceiling, the government will default. And we use that word Congress, 31. We use the word debt, 31. We use the word default, 31. This is showing you how this is all a pattern. Now, remember how Silicon Valley Bank failed on March 10th? Well, in the Gregorian system, that's 310, that is 31. Right? Another 31 connection to this bank failure. Now, why is 31 so special? It's because it's the 11th prime number, and 11 being your master number. It's the two pillars, Yakin and Boaz, the two pillars of the human body, the left side and right side. And this is about the sun and the moon. This is about the constellations and about the earth. Now we could keep going more and more, but this is the basics of the duality here. Really what it's most important and symbolizing is the human body meeting the opposite polarity, which then leads to creation, father, mother, child. So the next Fed meeting has also been a part of this whole conversation, and that would be June 13th through 14th, about 5 days after the next new moon, as you can see right here. And after doing this decode today, I feel generally positive about one last push up in the market before an event that hits the world stage, and I definitely feel it will be regarding finances as the main theme, as it seems it's building up now leading into June 5th and really starting to show how problematic this all is back on March 10th when Silicon Valley Bank failed, following up with issues regarding Credit Suisse. The controllers of mainstream media and social media are showing you that something is about to go down, and I intuitively feel it will be noticeable by the month of August and flat out in our faces by mid-September, which I've said many times here to prepare everyone far in advance for what's coming. But in the short term, I am generally positive about this month of June, and exoterically, this debt ceiling chess move seems to be something that could inject some last-minute risk-on energy into these markets. I've brought up the date of June 21st a couple of times. It's the summer solstice. Since it's landing on a Wednesday, and based on a pattern, I've noticed Wednesdays seem to be the days where the market tops, or we have these exaggerated rallies. The exaggerated rallies come to their finality, and June 21st also fits in perfectly into the last two Bitcoin automatic rally cycles of 2016 and 2019. So now this is a good place to pivot into the Bitcoin analysis, and I want to review 2015 since that is technically the same time frame we're heading into now compared to the overall macro Wyckoff cycle. I've had a lot of people ask me about this, so let's get going. And as I said moments ago, according to the decode I just shared with you, I am generally positive on that decode. I know a lot of people, when they're watching my decodes, they might get a little confused. They're like, do you feel good about it? Do you feel bad about it? And I'm letting you know I feel good about this. I'm feeling positive about this because of all things considered. And, I know the decode might have a lot of stuff that's a little bit new to some people if you're new to my work, but generally, you're going to see how these connections come to fruition along with the analysis. Now, we can't just take the decode or just take the analysis separately. We have to combine them all together and make sense of it that way. It's very important. So we're going to 2015 right now. We have this cycle going back from 2013 down to this 2015 selling climax. Excuse me. And I'm going to zoom in and show you piece by piece this Wyckoff cycle. So we have this buying climax here in Wyckoff followed by a selling climax. And then we technically have this like double bottom energy and double top energy. So you can see right there, bottom, top, little bit of a bowl, double top, rejection, come back down for a double bottom. This was a very interesting cycle, but if you see what it led to this beautiful uptrend that continued with higher lows, lower highs after the Shemitah cycle. So this yellow line right here denotes the end of the Shemitah. After that, we just kept it moving. Pretty amazing to see. And what I've been comparing this stage of the market to energetically has a lot to do with this peak right here of June 2016 and this peak right here of June 2019. And that's what I feel we're heading into at this time. Now, if we were to just consider this move right here into 2015, right here specifically, July 15th, we can see that, let me slow down. You can see that we were between the 236 and the 382 fib. Now, we've already surpassed that. We made it up between the 382 fib and the 0.5 fib. I know it's a little hard to see because of these lines, but just trust me on this. Now, if you were to turn this all off, you see this top here and this top here. Imagine we never went higher after March. That would make me feel like, okay, we are repeating exactly what that 2015 energy was like, because we would have that top here and that top here without the return down to the bottom. But instead, what we had was a top here, rejection with a higher low, followed by continuation rally. We've been holding these lows of November. So by now, we should pretty much be either have bottomed or we're in a different cycle. And I assume that we're in a combination of cycles. And that's what I've said many, many times, going back to my sell in May and go away decoded, which wasn't like, again, to reiterate this, it wasn't about what to do. It was about a cyclical performance in the stock market. And we prefaced that in the beginning, and how the month of June is pretty much an anomaly month. And that's why we're analyzing this move of 2015 right now, because you can see that in the month of June through July, we rallied. Even though we structurally did not go much higher, we still had a bullish energy. So we have this bullish energy of June 2016. We have this bullish energy of June 2015. We have this bullish energy of June and July, of June 2019, we ended that rally before July. And here we are now, we're in late May and we're approaching the month of June. And then we have this debt ceiling, thing showing up last minute. It seems to be part of the play. I hope that makes sense to you guys. So the idea here, also one thing to mention, if we go to this, let me show you really quickly. Just want to get back to this 2015 analysis. So remember, July 2015, which is this move right here, it was during a Shemitah. You could see from this line to this line right there, it was the Shemitah year. And this upcoming July 2023 will almost be 1 year after the Shemitah. So it is not the same 7-year cycle per se, but we do have a similarity, and that's the fact that this cycle of back here in 2013 through 2016 was during the Shemitah timeframe. The same thing with over here from 2020 over to 2023. It included a Shemitah, whilst this cycle right here did not. Okay, so we have a bunch of things to play with in this analysis, but I just wanted to start it off by saying that we are no longer in the Shemitah, and that's where I see the big difference. Also, we've went up higher than the 382 fib by the same time, again, making it slightly different and even more bullish. We had a way lesser correction. Well, that's to be expected with a higher market cap. So we're seeing differences, but what we're seeing in similarity is that this month of June into July was bullish. And that's where it gets very interesting. So I'm just going to make a quick statement and then we're going to move on. Speaking of last Shemitah, I just want to point out how Jubilee started during the nightfall of the day, leaving 269 days in the year. And if you take exactly 269 days after that day, you're going to get to June 22nd of 2023. So I'm going to show you this really quickly because we're kind of trying to find the timing here. So if you take off the last Shemitah, which would be 9/26/22, you go to June 22nd, you're going to see what I'm talking about. You have this Rosh Hashanah right here, then being 269th day of the year with 96 days left in the year. 269 days later brings you to June 22nd, which is one day after the solstice. And this same date of September 26th, Rosh Hashanah in 2022, was the day leaving 96 days in the year. And remember, the Queen of England allegedly died at 96, and Bitcoin's all-time high is 69,000, the mirror of 96. Silicon Valley Bank failed on March 10th, which is the 69th day of the year, and the day leaving 296 days in the year. This 69 is coded into everything regarding our overall crypto market decoding system. So I hope that's something interesting for you guys regarding some of the connections here by the numbers. And it gives me a very positive, feeling about moving into this particular date. Let me see. June 20th is a 69 date numerology. You have it with double digits. You can see that 69 right there. So another connection. June 18th being the 169th day of the year, also leaving, 196 days. So you could see like all these 69 connections that we're getting. And that means that from June 18th, that's Sunday, through the 22nd, there are multiple 69 connections. And again, Bitcoin having an all-time high of 69 and the word Saturn having that 69 connection is what makes me take this so seriously, specifically since Silicon Valley Bank failed on that 69th day of the year. So that's huge, right? It really solidifies the code. And if you take from June 22nd, this is really going to make you guys laugh. If you take from June 22nd, the date that I pointed out earlier being 269 days from the start of Jubilee, and you connect it to the date that Bitcoin hit $69,000, which was November 10th of 2021, you're going to see it's 589 days. I know you guys like having fun with the XRP 589 code. Well, there you go. This is too good. This is really too good. And now that could definitely mean something for XRP. I think it would be funny. Like with XRP, you do have the 58. You have that 58 right there in English ordinal. It's just funny to think about how Bitcoin has that connection to its all-time high connecting to this. So yeah, just having a little bit of fun, but that is a pretty important connection. I think the 269 connection and the 69 connection, all of that is really what's the most interesting. So anyways, because of July of 2015 still being in a Shemitah year, this is why I'm not considering it exactly to this cycle, but it should still be pretty close regarding a bullish energy into this time frame, as we've seen time and time again after Bitcoin has a larger buying climax to selling climax correction, as we've already completed. And now we're in the stage of completing its automatic rally. So this is just my way of saying that we have another, June bullish proof. Even here, we have this larger correction after that. We have this larger correction into June because of the eclipse. But as you can see, off of that low into this peak, it was about a 42% rise in price. So we can have some pretty bullish moves in that June-July timeframe, no matter if we're in a bearish energy or in a bullish energy. And it seems that Bitcoin just really likes that month. And I could assume that maybe it has something to do with the Genesis block. It might have something to do with Satoshi Nakamoto's birthday. There's really so many ways to chop that up, but it's pretty interesting. Anyways, let's move on to the regular analysis, and that would be on the monthly. I hope you guys enjoyed some of this decoding stuff today and a little bit more on the structure. We have our monthly right now not looking so amazing. We've rolled over from this structure and we're not really holding on to much at this point. We're holding sideways now, going on I mean, really technically, we've been in a sideways range going on 70 days. So this is definitely arduous, and we're at a point now where it's time to make a decision for Bitcoin. And we tend to get these automatic rallies ending in the same month. They're very quick. They're very blow off top like you could see right here, ending in a rally, just getting sucked into a downtrend. We're not in really a macro downtrend by any means at this, like when we're looking at these big term charts. So we have to speak micro, and we just really haven't had enough data here in this 27 level. So I'm actually happy that we're building it because the more we trade in these ranges, it means that if we were to break up in the future, we're more likely to hold structure in the macro. We're more likely to hold that as our absolute selling climax lows, and not just raging to the upside. You want healthy momentum overall in an asset. When you have too much choppy charting, it's not healthy, and it shows you that a lot of unsophisticated players are in that asset, probably trading with a lot of leverage. So needless to say, this monthly isn't looking amazing, but let's look up some moving averages and see what's up. So we do have something positive right here. This is going to be a wolf cross with upside implied. That's important. All right. So even though I was saying what I was saying regarding candlestick analysis, this is a point where breaking out the moving averages helps you. Even though it's a lagging indicator, it could be very helpful to help you see clearly. So I hope you like the way I'm structuring this right now, because this is going to be overall very helpful, especially to newer people to TA. So we have these two coiling up at 23K. It's pretty low beneath us, but that seems to be the rejection point going from August, July, and back here in January and March before we made another leg higher. And now that is forming a cross, which is a bullish cross actually, and both of these moving averages are sloping to the upside. So that's very good. Now, another thing we're seeing is that we have these EMAs coming in pretty much around where we're trading right now and where we've been trading for the last 2.5 months. So we are above these moving averages, but we're not in a bullish posture with the moving averages just yet. We want to see this blue moving average, which is the 13 EMA, get above the 34. It's not there yet. So we would need this blue moving average to cross to the upside and then eventually have it be in blue, orange, red instead of right now where it's orange, red, blue. It's tightening up and they're constricting. And as they constrict, we tend to hold in that range. So that's good. And that makes a lot of sense why on the monthly chart, we're holding these levels. But what I would like to see is a buyback. And we don't have many days here. We have, let me see, 28. We have about 3.5 trading days to get to June 1st, the monthly close. And that is enough actually to move up a little bit from here. Like we're trading at around 27,000 flat. And this moving average would be a total move of about 5% up to get above the moving average and above the moving averages, And then it would be about a 7 or 8% move to have a green candle. This is very possible in the last minutes. And I suspect leading into the monthly close, we're going to see the traditional markets get super volatile leading into this debt ceiling, decision. So just keep that in mind. We could definitely still close the month of May green. Now, we don't have a bi-monthly close coming in until June, so we'll cross that when we get there. And we won't have a quarterly until June as well. So next monthly close is going to be pretty damn important, 2-month and 3-month. But for now, I just did the monthly analysis. That's perfect for where we're at. All right, so we don't have a bi-weekly close coming in until next week. But we're holding this 34 EMA. We're about to see the 13 cross above the 21. That could actually happen midweek. And again, same sort of deal with what I said about the monthly. I want to see this blue moving average cross above the red moving average to feel more confident in bullish momentum. But otherwise, pretty good. Okay, now we're looking good on the weekly. Okay, so this is the weekly chart. We see this in bullish posture where the 13 is above the 21, above the 34. The last time we tested these moving averages to the downside, we sucked beneath them, but then still got back up into them. in the same week. So this is looking pretty good thus far. Pretty much backtesting the 21 whilst we're in a bullish posture on the EMAs. Yes, we've been in a downtrend now, pretty much going for 40 days, but overall we're holding this sideways range. And macro moving averages are looking pretty good. Let's look at the RSI is above 50. We can see that we're still technically in bullish posture with the MACD, but getting a little bit of downsloping action that could all change very quickly, especially in crypto. I'm not trying to be overly bullish right now, but I'm just pointing out the things that I'm seeing. So we have here a clear reason as to why we've started dipping down a little bit lower, and it's because of this closure below the 8 simple moving average. I'm sorry for all this noise. I know it might be a lot for people, but what I like right now is these 200 exponential, 200 simple moving averages holding us. I would really prefer that we stay above those, but ideally getting back above the 8 simple moving average on the weekly close would be stellar. And just getting back above it soon before the monthly would be great. And it's sitting around 28,000 right now. So generally for a monthly close, getting it back above, 30K. If we could get a 30K monthly close, that's going to be wild. And if we could hold it into the next week, because that'll be your bi-weekly close. Also, just pay attention how this 55 simple on the bi-weekly is sitting at 33,000 right now. We've yet to test that. So it's very much in the cards. That would be your next leg up, though. That would be that theory. And then right here, you can see that we did on the daily have a wolf cross, but to the downside, we've been chopping sideways and lower. Since that moment, you can see these 200s, 200 exponential, 200 simple are still sloping to the upside, which is good. The last time that we tested the 200 simple was back here on this larger correction on March 10th, Silicon Valley Bank failing. You could see that MACD is starting to flip green, but still in negative territory. We have this RSI getting close to 50. I think on today's close, we will get there. Let's look at our EMAs for right now. Okay, great. So EMAs are in bearish posture, but getting back above that 21 exponential would be key. So again, all things are leading to something above 27 right now, and 28 would be great. I don't know if tonight, later, when CME, Chicago Mercantile Exchange, opens up and perhaps the Dow opens up, if we get that final moment boost to send us over some of these key moving averages. Last week was really awkward because right when those opened up, we got traded down into the finality of the close. It's very it shows you how, I don't like using this word loosely, but manipulated this all is. All it takes is for these big institutions to come in, short, get these leveraged long players, taken out, and then reverse you in the other direction. It's a very typical thing. And then it adjusts sentiment and then rinse, repeat. Okay. So we'll keep it at that. All right. As for now, Bitcoin holding these levels of what to me looks like a spring in a micro sense. It's fine. It's really pretty fine. Let me quickly see if I had a chart showing this Wyckoff schematic. I don't know if I had something drawn out. Okay, yeah, no, it's all good. But for now, just keep that in mind. We have a buying climax, what looks like a selling climax here, an automatic rally, and now we're in spring energy. And until we can start trading back above 30K, we're not in SOS territory, which is a sign of strength. And that means that we are technically just continuing this downtrend in the micro. High, lower high, technically still lower highs, low, lower low. And we're holding a little bit of a bottom right now. Bitcoin's been really damn strong at 26.5. So yeah, I would like it to get back above that 28. 28 would make me feel more confident. And if I could pull a fib in the short term, I will show you kind of what I would like. Oh, okay, here we go. Here we go. And then we're going to move on to ETH. Okay, great. So this is kind of what I was explaining before. Let me extend it out, give you guys a more clear view. So we have buying climax here, selling climax, an automatic rally, rejection down to a spring. We're actually holding this 26K territory at this time. And what we would like to see is a break above this blue line, which is 27.5. We've been getting multiple 12-hour closes below. So this is the micro analysis. If Bitcoin was to start closing 12-hour candles above 27,500 into your 382 fib, anytime you get back above the 382 fib, you could pretty much call the prior lows your retest to the downside. And that's your way of kind of being a little bit ahead of the next move. And you will sometimes get in the same 12-hour candle a swipe up from the 382 directly into your golden pocket. Now, we can't call anything bullish just yet until we start breaking above the automatic rally highs. That's your SOS. And yeah, that continues to come back to what I keep saying, 30K. So yeah, Bitcoin needs to get above 30K, and it really needs to hold these levels at 26,000. And for now, with this environment pivoting into June, this could all happen very, very quickly. So let's make it to ETH, kind of talk a little bit about this situation. It's probably going to be a quicker analysis just because there's nothing really to say here. It's going to be following the same energy as Bitcoin. You can see I have this blue trend line here clearly showing you a resistance point. I'm not a huge trend line fan unless it's macro, but this is obvious at this point. We do have low, higher low. Technically, we've broken above the 236, kind of snaking around this 236 level, but I really want to see trading above the 382. And like I told you earlier, between the 382 and the golden pocket could happen in short order, just like we saw over here on May 5th, the lunar eclipse date, where we have a single candle that could just swipe through all these levels, get a rejection, come back down. We are going to be looking towards this level now, about $2,000 for will we get an SOS? Will ETH go up for a double top or maybe even go a little bit higher? That type of bullish energy, it takes a couple days to play out, but it really is about following Bitcoin. So whatever Bitcoin's doing at this time, you're going to see with ETH. And that same analysis goes for the downside. The only other thing about ETH is that it has this 382 fib below it. And this is the macro fib pull. If I go from this swing high down to this swing low, and this 382 right there sitting at 1,670 has not been back tested yet. So ETH is looking really damn good. Overall, the fact that it continues to trade into this 1,800 territory is great. We're similar to Bitcoin, where we're about 70 days holding this horizontal level between 1,730 and 1,900. Getting back above 1900 would be ideal for ETH at this time for continuation. And then the same Wyckoff analysis and fib levels that I told you about with Bitcoin, you could just copy that over to the ETH analysis. Okay, now XRP is looking a little different. We have back tested this 236 fib, and we are now looking like a kind of an inverse head and shoulders vibe. And I believe we might be breaking out of it as we speak because we have this going on. Now, this is not the most fun pattern to look at, especially with XRP, because it's too volatile, too choppy. It does these Bart Simpson heads all the time. But yeah, I would look at this. I would take it out of log scale if you want to get a measured move. I would maybe, be conservative on this pull, somewhere like that. And really no parties here because it's just getting back up to 53 cents. But this tells you the next move for XRP is likely into that 53 cent territory. And I will say this for the 100th time, no parties on XRP until it starts closing macro candles above 54 cents. That would be like a weekly close. And 60 cents is going to be a pain. It's going to be a real struggle. I think I've shown you guys enough times why. And this point right here at the 382 fib at 60 cents, yeah, we're going to have a little bit of fun with that. And knowing XRP, it could blast through this really, really quickly. So, this is looking decent. The fact that we've cemented these lows into May 8th, we're getting a little bit of, actually, wait 1 second while this is on my mind. Oh yeah, it went up 322 cents. 1 second. Okay, I'm just trying to see some of the numbers here. All right. So yeah, ideally, if this does come to fruition, this pattern, the inverse head and shoulders, somewhere around 53, 54 cents would be great. We'll see how it tests here in this horizontal resistance. This resistance coming back into September 2022, pretty much the start of Jubilee. And we came right back up into those highs. We did make one single day trade up higher, but got rejected pretty much in the same way, same fashion. Now we have to see after this back test, is this going to be the end, or is this going to come up and actually just, kind of solidify that 42 cents is now a new support, as opposed to before it was clearly a resistance level. You could see it getting rejected even back here in January 2023, heading down into the 35 cent territory again. Now we've back tested that level. That's actually really healthy. That's a good thing to see. And XRP needs to make a move soon. There's pretty much no retail activity at this time. It's just chopping up in the same, it's leverage trading pretty much. More investors need to show up on this one. Okay, so upside target, downside targets have been discussed. If XRP starts trading below 42 cents, that's not looking good. I think I'm very confident it's going to hold those levels even with the upcoming full moon. I would say that back tests of 44 are definitely in the cards, but keep this 236 in mind, that it's a strong level to hold in a macro fib pull that's going on from April 2021. So it's a long-term horizontal play. Let's get to Litecoin. It's been a minute, I think. All right. Now, I just want to comment on something. I read all of your guys' comments in these Patreon posts. I love all of your input and your support, and super grateful for it all. And sometimes I see some things where I'm like, oh, okay, like there's still room for education, right? And somebody made a comment. I'm not pointing anyone out. Like, I don't want to do that, but it happens from time to time where they talk about, like one coin's performance versus the next. And Litecoin here was compared to Bitcoin, and how Litecoin, I guess, is outperforming Bitcoin. And now I'm going to correct that. That's not true at all, actually. If you look at this fib pull from the swing high to the swing low, again, we're in logarithmic scale, and we're going to make sure that this fib is on log setting. It is. You can see that this chart of Litecoin is trading between the 236 and the 382. Now, if we go to Bitcoin, technically, if you're just looking at it from that perspective, and I'm being really nice right now, you can see that Bitcoin has traded between the 382 and 0.5, so actually one step higher. So it's already done better. Secondly, if you look at the support levels after the C19 crash, and you go from $40, again, we're being generous here, and you bring up to where we're currently trading, that's 120% up from the most dramatic market crash in a very long time, okay? In the existence of crypto, at least. I know we have the 2008 crash, we have the 2000.com bubble, etc., but since crypto has existed, this was the quickest, most dramatic thing we've seen across the board. Obviously, I'm not isolating Litecoin, but obviously, when you take all things considered, most altcoins made new lows on that moment. So you take Bitcoin, I just want you to remember 120%. You look at Bitcoin off of the same measurement, which it would be right around here, somewhere around $7,000. And I will be generous. I'm going to go up even higher. And now you're at $9,100. Put it around 9,000. And you can see Bitcoin is up 200% off of that. And I was generous. So if we compared actual where it is compared to where it is, that's 320%. And if we went off of the actual cycle lows, it would be about 600%. If we did the same for Litecoin, we'd be looking at 250%. So this coin, that's just one thing to bring up. And I'm not here to play the measuring. I just want to, this is where we educate each other, where we help each other out. This cycle of 2017, Bitcoin was at $19,000. This coin never went on for a new all-time high. Bitcoin went up to almost 70,000, and this coin was still only at 400. And then it came down and corrected still 90%. Bitcoin didn't even correct 90% off of a larger, more dramatic move. So you see how like Litecoin is not that, it's kind of old. It's become like old news. I'm not against it. I understand what it is and what it stands for and its history. And like, yeah, it had its time back in the day, but like everything did. The same thing in any coin that was invented in 2019 or 2020. A lot of them had an amazing run. So yeah, there's really nothing comparable here. Litecoin has Bitcoin has outperformed Litecoin in every part of the conversation, even to this day. Now, getting these rejections at the 382 is not good, because one of my main things that I talk about for the automatic rally is you want to get above that 382. So if this cannot breach $104, this is not positive. Okay. And the fact that if you go and look at the horizontal structure, you have this blow off top coming into 104, another bull trap coming down to 104, and then breaking that level, you can see we've rose up to that level and gotten rejected twice. So this is not good. This is not like a great looking chart. It has chart history. It has its history, but ultimately, yeah, this is old news, and it's not really performing that great at all. In the macro, the micro. Okay, so just now that I got that out of the way, again, this is the Red Pill podcast. I know sometimes it could get spicy. It could be, offensive to some, but we're not here to pick teams. We're not on team Bitcoin. We're not on team Litecoin. We're not on team whatever. We don't care about that. We're analysts, decoders. We're esoteric. We're trying to see it for what it is. More importantly, it's about expanding consciousness and not getting caught up in this groupthink. And hopefully anything that I share, it's to help educate and help you remember, And I believe that could be an important thing to revisit. But getting to the analysis on this, really the next move for Litecoin is potentially into this 0.5 fib if Bitcoin decides to break up to 31,000 and higher. And I would look at $134 as this is the peak right here. And you have this 141 level, which is this back test here before the bull trap. That could be a tight little range to get to, somewhere between 134 and 141 below the golden pocket. And that would align you with a similar move that Ethereum did back in the prior cycle. So you can see here that if I took a fib pull from the buying climax to selling climax of the cycle of 2017 to 2019, we came up into the bottom of the golden pocket on that automatic rally. That looked great. I don't think we're going to do that this time. I just don't see that being in the cards. I would see us chopping between these two bull traps. So you have this bull trap here and this other lower high, and it's kind of in reverse right here. You have this move right there and then that move. And that I don't think we're going to be able to make it as high as that on this particular asset. It's too old now. Like, it doesn't have that shiny object syndrome degen vibe, like we're in degen territory, and I'm saying that to be transparent, and I don't like it. I don't care for all this Pepe coin memery, but it is what it is, like we live in a world of memes, and Litecoin, I don't think it's a horrible project, just a fork of Bitcoin essentially. But when it comes to a part of an investment thesis, it's like betting on an old horse. So yeah, I don't really have too much to say other than that. And I would be optimistic that another leg up to the 0.5 fib is in the cards, potentially even into, 141, maybe 150. And getting onto the 618, the bottom of the golden pocket, would just be a repeat of last cycle. So hope that helps. And also to let you know about October this year, I think it could return to $33 because we have this test here on this trend line, the C19 level right there. And I do see that it could come down to 40 for a double bottom into $33 on the September-October timeframe. That might be when it's an okay buying opportunity, because I know it's going through its halving next month, by the way. Correct me if I'm wrong, but I believe Litecoin is going through its next halving in June. Again, correct me if I'm wrong. It's hard for me to remember all this stuff. Lucky I even remember that. But yeah, that still can lead to a big correction, because we saw that. Anyways, I don't want to go too deep into it, but I feel that might be when it's an opportunity. I just don't know. I will say that if we get a shitcoin washout and we have a bunch of this meme stuff go away, I don't think Litecoin is going away. I don't think Litecoin is going anywhere. I think it's probably just going to maintain because of its core following. And because of its, yeah, it is what it is. So although it's not exciting, it's not on the radar. And that's kind of a good thing sometimes, depending on how you build your investment thesis. So we're now moving on to Songbird. Okay, we covered this maybe a couple months back. Nothing to say about this because it's a consistent downtrend into Hades. This is in the depths of hell. It's trading at a fraction of a penny right now. It's trading at the same lows back in March. That would be like if Bitcoin was trading at 19,000 right now, and it's almost $10,000 higher than that level. Whilst this is in a downtrend, a lot of altcoins have been in an uptrend. This thing is in price discovery to the downside. It just was launched at a bad time. This is that Flare Songbird deal. Yeah, I'm really glad I didn't give any prana to this back in the day, because this is really this is something. Yeah, so really not much to say. You can't really do analysis on a chart like this. You could do your best, but really you're just going to end up with a guessing game because you have limited data. You have a trend that's still in play. Like the trend has not shown any pivot whatsoever. We're heading back to a double bottom, essentially. We're in double bottom territory on an infinite bottom, by the way, because when you say price discovery to the downside, that means there is no bottom. It's just forever going down. This thing could go to zero. It's technically zero. Yeah, popping up to the 236 at best might be in the cards, but that would be a key rejection point. And you could even have a macro double bottom. So because of the timing on this, where it's trading right now versus how close we're getting to the fall time, when we're looking at the big picture, this is, if it's given to you for free, then awesome. But this is not some shit that I would be putting my money into. Just for fun, maybe after the next Bitcoin halving, if this thing is still around, maybe throw like, $100 in it for fun. And then just right off the lows right now, emojis, just off these lows right now to the prior highs, that's 6,000%. So, there's nothing wrong with playing this as a venture capital play, like having 1% of your portfolio, max 2%. But overall, this is there's no TA to do that you could do on this. And that's hopefully I want you guys to see that because of this style of chart, if you ever load up a chart like this and you want me to analyze it, I'm going to be saying the same exact thing. It can't change because as a technical analyst, I need data, I need structure, I need different trends. This is there is no structure. It's the same trend, price discovery to the downside, right? So I hope that helps. Alchemy Pay. Different story here, but very similar in the limiting data. So we only have data going back to 2021. This was launched after the C19 event. That is something that I don't like. I actually like to see how the coins made it through that C19 crash, because if they made it through that crash and held structure and they're trading higher than that today, that tells me that, okay, we're actually holding a more sophisticated investment group right now. We have a much more like the players that are in this game of this asset are standing strong. And it's not just, pump and dump. But anyways, let's get to some of the analysis on this. I don't even know where I could start this fib pull because I can't really tell if it's technically here or if it's technically here. Technically, these types of wicks where it just launches and goes straight up in a line and then enters price discovery to the downside after, like what could you really say? So again, similar to the last chart, this is in price discovery to the downside. Even though it has gone up a little bit and it's looking pretty promising at this moment, it has no real prior data and it's broken lower than its launch prices, and it remained lower than its launch prices for 200 days. Yeah. And it has yet to change trend. So it's still working in the same trend. So I'm just being consistent here, It's like the last chart almost. It's just if you got in, you're up a little bit. But how short did that last? 30 days. And then if you went off of that horizontal structure, which would technically be here at 1 penny, it's 150% up. So not the greatest performance. And with this move into 5 cents between the 618 and the 0.5 tells me this could be the end of the automatic rally. So yeah, this is probably toasted. If Bitcoin goes up another leg higher, we could probably see this thing do something like this. So keep it in mind. Where if we can make it up, we might get rejected off this level right here and then keel over back down to this 236 territory. And then you have to see how it interacts, because sometimes it will go down for a double bottom. That's typical what these types of charts do. And then hold on for dear life, because the difference between a double bottom and going another leg lower on this type of chart is highly likely. It's price discovery to the downside, continuing downside trend, really nothing positive. Now, on the bullish end of the spectrum, if this broke to the 0.5 fib, back tested really quickly and did like an inverse head and shoulders move, then sure, you could maybe make between the 0.5 and the 618, but unlikely. But be optimistic. I would not invest in this right now at all, because there's almost no gains that are underway. And if somebody's already holding this and they're looking to de-risk, this would kind of be the vibe that you want to get ready for, to de-risk yourself from this type of asset. All right. Dogecoin. Oh man, I said this would be shorter, and we're taking time, but it's okay. We'll adjust. I know most people enjoy the longer podcasts anyways, so you guys appreciate the value. We're on Dogecoin right now, and this bottom side trend line, you saw I just extended it, and I extended it for a reason, because we've pretty much returned back down to it. We have 1, 2, 3, 4, 5, basically around 6 touch points now. And we've been holding this horizontal range since breaking below this 10-cent level for 380 days. So it's about a year. And if you take off of this top that we got, we're looking at about 750 days. So this is kind of similar to the XRP deal, where it's just been on a perpetual move down. Now, what's not similar is Dogecoin outperformed XRP very well in the last, This is such an enigma, this coin. 7,000%, 40,000%. Fuck me. So look at this horizontal trading range lasting 1,200 days and then popping off of this horizontal trading range by 30,000%. It's madness on a coin that's been through 3 cycles already. So this has a ton of chart history. Yeah. Wow. Okay, so this is why that trend line is so important. You see where it's rejecting back in 2014 on the buying climax, then here rejecting on the buying climax of 2017. Then in 2021, we broke through it, and now we've returned back to it, holding it as a support. That's very good. That might mean that the bottom is in for Doge at 4 cents. Now, I'm not calling it the bottom. I'm just saying, you have to analyze it as such. Prior resistance becomes a new support. And it only looks like that if I put it in a monthly chart, because it gets rid of these wicks. This is a much more sophisticated way to consider this. Now it's just a trend line, so it's not prioritized. I use trend lines as a tertiary part of my analysis. But in the meantime, we are coiling up into what could potentially be somewhat of a symmetrical triangle pattern. Really hard to tell with this style of asset. But if that was to be the case off of this to here, I would like to be conservative there, just going off of range. That's a move into the 0.5 fib, so that's nice. That could bring you somewhere into 19 cents, 19, 20 cents for Doge on the finality of the automatic rally. Now, I'm not invested in this thing. I don't think I ever will be. I don't really know what the purpose of it is at this time. I don't know how much longer they could keep juice in this fruit. Maybe in the next cycle they could. But yeah, if this thing did what it did in the last run, then it would be stupid to not have a little bit, regardless of how meme-like it is. So I'm optimistic. I don't really like holding nonsense, but whatever. At this point, this whole market is in, it's in la la land. Just one second. I'm going to take a sip of coffee. Okay, yeah, so getting back to the analysis, 15 cents is something to consider because of this rejection right here, and then we have a clear horizontal range right there. Support there, support there, support there. So you see where I'm going? 16 cents is key with Doge. Let's see what's up with the code. Get any 16s? Well, we got the 103 with Dogecoin Doge. Just come back to Mercury. Yeah, I wouldn't really be using Gematria for an automatic rally target, but it does seem to be that it likes this 16-cent level. We got a hold, a bunch of holding here, coming back up multiple rejections, which then led to your selling climax. And then right here, you have this jump up to the 15 cent level, 158, which is basically 16 cents. So yeah, I would say on an automatic rally, 16 to 18 cents is possible, something like this. Not anything dramatic. Like I'm not entirely sure if it can make it up into these targets. It would require some excitement going towards Doge. We need more prana headed there. And I don't really, at this point, I don't even know. Elon is pretty much, oh, okay. So this is the last one, Stronghold token. This is the same situation as Songbird, just price discovery to the downside. Look at this chart. Like, look at the wicks. 33%, but the wick in and of itself was an additional 100% on top of that, followed by a sell-off of 50% in the same 24 hours. This is insanity. This choppiness like this, where all these wicks to the upside, I would never touch this kind of stuff. But again, if you want venture capital, this is where it's at, because if it did have some trading back in the day and it doesn't completely go to zero, I would wait on these sorts of things until after the next Bitcoin halving. I would personally wait on building venture capital until then. So that's sometime between a year from today, like May, June 2024. I believe it could be even earlier than that. Just obviously depends on the block rewards. But yeah, like with this trading down at the lows of January, I mean, this is not promising. Look at the way this is trading, the style, the jagged upside wicks. I mean, the multiple rejections at the 236 is, you just can't really, there's no way to do sophisticated analysis on a project like this, very limited data. I would say this is more scary to be an investor in than something like Songbird, solely because these wicks that we're getting, this is just madness. We're seeing single day wicks with rejections of, 20% here. Got a rejection 20%. Here we got a rejection of 23%. I mean, what the fuck? Here we got 40%. You see, like, this is not something that feels good to hold. It's just too much volatility. It's trading at 0.004 cents. It's never traded above a penny, really. I don't even know if this wick counts, because this is like, again. So yeah, like I think these are the sorts of things that you want to stay away from. Like, I could see a purpose for it as venture capital. Please be, just be conservative. Please be conservative. This is not the type of stuff that you want to be throwing a lot of your hard-earned money into. This is like betting on, like a final 20-second Hail Mary pass. You really just have to consider, if you're interested in investing in this type of stuff. And again, I'm not an investment, I'm not a financial advisor. This is not financial advice. But if I was interested in something like this, I would put like $100 in it, like just for fun. But at best, a lot of this stuff is hard to sell because of the specific exchanges it's on. When you start putting $100 here, there, and you have 20 different altcoins, it starts being confusing. Like, what you hold, you start to forget. So that's the kind of stuff. It's just like, I think we need to move to a more sophisticated investment thesis, which is about having less holdings, not being over diversified, really having conviction in what you hold, like knowing what it is that you're getting involved in, having a long-term time horizon, knowing the TA on the project so that you could, kind of set up in advance when you're going to be buying or doing your dollar cost averaging, or when you'll be doing your de-risking. Again, I have that exit strategy blueprint that teaches all of that. It's included in my crypto mastermind course. That's on sale for anyone who's a Patreon supporter of mine. I really appreciate your support. So yeah, like, this is really where I'd be at. And when I see charts like this, it worries me. Now, because I've had so much people ask me about Hex, I will be sharing some analysis on Hex perhaps next week, but my idea of a spring has come to fruition as well. So now we've had every play that I've called has been coming to life on this project. I'm really warming up to how this thing moves. We had this buying climax, the selling climax vibes, followed by the automatic rally. We hit the target perfectly. We hit the downside target perfectly. Now we're into spring territory, which is exactly how Wyckoff method tends to go. And I don't know enough about Pulse Chain or the Pulse ecosystem, so I'm kind of waiting on people that I've connected with in the past to educate me more before I could start speaking on it. But I clearly can't do any TA on PulseX. There is no chart history. But people have said that they're very interested in my hex, analysis. So we'll continue to follow up with that. That community is very big, and it is what it is. They've some of them have been incredibly enlightened by following my work in the past, 6, 7, 8 months, and they've started to see now how this all works, and it's helped them redevelop their investment thesis and just get a little bit more dialed in their process. And these calls that I've been making in advance about the de-risking targets and the reasons why and what to expect on the downside after, now that they've come to fruition, we're having more people start to respect the esoterica, like the esoteric perspective of how this market works. So for me, it's a great opportunity to be able to connect with more people and help them see thy code. So we're going to wrap it up there. I really appreciate every single one of you. I hope you have a beautiful, beautiful rest of your weekend. Sending you all lots of love, and we'll be catching each other very, very soon. Definitely make sure to leave any comments below on any interesting information you have about what's to come with this Federal Reserve meeting in a couple weeks, and then what you anticipate with Congress and the U.S. debt ceiling. Much love.